Welcome to Paging Financial Freedom, a podcast about doctors and spouses and the journey to financial freedom through real estate and tax savings. I'm Dr. Daniel Shin, a surgeon and real estate investor. You might know me on social media as the Darwinian Doctor or the founder of Serious Real Estate.
And I'm Lila Kaplan, former Wall Street professional, certified financial planner, and the person on a mission to retire my orthopedic surgeon husband in the next 5 years. I specialize in apartment investing, helping doctors and their families build true financial freedom beyond their W-2 incomes.
If you're interested in achieving tax-efficient financial freedom through real estate, you're in the right place.
Let's get started. Welcome back to Paging Financial Freedom, the podcast where we pull back the curtain on what it really takes to build wealth, live life on your own terms, and stop trading time for money. I am your host, Lila Kaplan, full-time real estate professional and former certified financial planner.
And I'm your co-host, Dr. Daniel Shin. As always, we're really happy that everyone's going to join us today for our conversation.
And Daniel, today's guest is someone that I have been really excited about. I've been talking to him for a few months now, and we're talking about a man who has spent decades as an orthopedic surgeon, served as a physician for the United States ski team, and built a real estate portfolio across multifamily, office, and industrial property, all at the same time.
And he's spent decades on the private equity side of multifamily acquisition and development. And as a physician myself, I'm really excited to dig into this story because his path is really different from the one that most of us lead. So I can't wait to hear that origin story.
Yeah. And he is also the best-selling author of Why Doctors Don't Get Rich, the founder of Rich Life Mastermind, and he has been financially independent for over a decade. Our guest today, drumroll, is Dr. Tom Burns. Dr. Burns, welcome to Paging Financial Freedom.
Thanks, Lila. Thanks, Daniel. That was a long and undeserved intro, but I appreciate it. Glad to be here.
All right. So, Dr. Burns, one way to get started is to just kind of dig into this. We've heard that you have a pretty incredible connection to the book Rich Dad, Poor Dad by Robert Kiyosaki. Do you mind just telling us that connection just to kind of get the ball rolling here?
Sure. It's just kind of serendipity. Back in the day, and still to this day, I read everything I can get my hands on. And so I was reading a lot of books back then, a lot of personal development books, real estate, anything I could get my hands on. And basically one day my family was gone. I do errands when they're out of town. And so I took my truck to the car wash to get it washed. It's one of those deals where you hand them off your vehicle and it goes through a deal while you go in the lobby and kind of wait. So I went in to pay my bill, and believe it or not, on the back shelf was this purple and gold book. All I could see from the distance was it said Rich something. So, and we're all trying to make a little money and learn how to do this. And I said, let me see that. And it said, Rich Dad, Poor Dad, what the rich teach their kids about money that the poor and middle class do not. I thought, that's a pretty cocky statement. So this guy must have something to say to me. So I bought the book. Not a big deal. I went home again. As I said, my family was gone. So I did my errands. I did what I needed to do. I was headed to bed about 11:30 that night and picked up this book that I hadn't even opened and just was going to see what I was going to read one day. I read the intro, read a little bit of the first chapter, kind of leaned against the desk and read a little bit more, sat down to maybe finish the first chapter. And long story short, 4 hours later, I'd finished the book. It was literally 3:30 in the morning. And I waited till 6 or 7, called a few friends and said, look, I just read the best financial book I've ever read in my life. They laughed at me, said, sure. I gave them the book. They agreed. And so I had to figure out who this guy was. It was Robert Kiyosaki, obviously, but, we didn't know if it was Kiyosaki, whatever. So we called the publisher. There was a number on there that you could call. And I figured I'd get, Penguin or Random House or somebody like that. And somebody answers the phone. And he said, we said, hey, we really love this book. Would like to get some more. And the person on the other line said, who is this? And it's like, well, this is Tom Burns. I read your book. And I said, who is this? He goes, this is Robert Kiyosaki. So it turned out that Robert what he had done was he had created the game Cash Flow. And the book, Rich Dad, Poor Dad, was not really his first book. It was actually his second book. It was kind of designed as a brochure to sell the game. nobody would publish it. And so he has self-published it, and he printed up 1,000 copies. So anyway, I had gone back the next day. I'd bought all the rest of the books on the shelf. There were about 2 dozen books there at this bookstore, handed them out to friends. We went and visited with Robert. He taught us how to play cash flow. My wife won, so we still have the game. Robert gave us his game. And, so we've been friends ever since. And, I kind of laugh because I'm leaving, getting ready to hop on the plane. He's pulling books out of his trunk, saying, "Here, take these." I said, I don't want to take all your books." He goes, "Don't worry, nobody's buying them anyway." Uh, and 44 million copies later. And so when he reprinted it, he put my name in the acknowledgments in the front of the book. I used to laugh. I'd go to Africa and see Rich Dad, Poor Dad in the airports, and then my name would be there. So, but anyway, so we've been friends since then. And, he was actually the person that suggested I write my book.
That's incredible. Were you a physician at the time, by the way?
Yes, sir. I was.
That is an incredible story. And as a matter of fact, Dr. Burns, I have your book back here, as you can see. And I bought several copies as well. And just like how you gave your books to your friends, I've been giving this book to my friends because I just thought it was an amazing, amazing book. So, and we'll unpack that a little bit more later on. But just to take us back to the very beginning, where did you grow up and what was the money conversation like in your household?
Right. So I was, we moved a little bit. My dad was in the Secret Service. So we were in DC when I was pre-K, that kind of thing. And then we moved actually to Independence, Missouri, so he could be with Harry Truman. And then when I was about 13, we moved down here to Texas. So money conversations, it was pretty simple. It was if you want to buy it, you got to have the money. That's what Dad would say. So I had jobs. I mowed the lawn. I mowed other people's lawns. I did stuff like that, and we had a nice kind of great middle class upbringing, and uh, we didn't have any of that. We didn't have any deeper money conversations other than if you want to buy something, you go make the money. And later, he used to say I had champagne taste and a beer budget. I'm sure a lot of us have heard that from our parents, but that was pretty much it.
And then how did you get into medicine? What drew you to orthopedic surgery?
I joke to people, although it's really pretty much true. I mean, I played sports and chased girls when I was young, and at least I was successful in sports. And so that's what I did. And I just realized I was pretty good, but there's levels of good. I wasn't going to get paid for it. I was good in school, and I thought that I would become a doctor and be an orthopedic surgeon and do sports stuff so I could hang around the athletes that I was used to hanging with. That's the honest reason I kind of went into medicine. And it worked out, played out pretty well.
Yeah, that's my husband got into orthopedic surgery because he broke his wrist. And he really liked bones, and he was a physical therapist first, and then became a doctor because he said PT is boring. I want to be a surgeon. So yeah, so he ended up doing orthopedics. Yep.
Now the orthopedic surgery, it's a fun specialty. So that's kind of why I wanted to do that. So it was a good time.
Fun, but extremely demanding.
And you were successful in adding the kind of sports sort of association. Can you tell us, how did you get associated with the U.S. State's ski team?
Yeah. So, I had a residency. I did a fellowship. I did a sports fellowship at a place called the Stedman Hawkins Clinic, which is in Vail, Colorado. And, Dr. Stedman was the pioneer of ski medicine. He took care of Cindy Nelson and Tamara McKinney, and, kind of the older skiers. So he was the one that did it first. So because of that, a lot of athletes would come to see us. And so I took care of the Alpine team in early 91, late 90. And then after that, having that taste of the ski teams, I ended up being the physician for the Olympic Training Center in Lake Placid. And that's where I met the freestyle team. So I was young and pretty athletic. So I trained with them in Lake Placid. And so I got to be real good friends with them. And so I've been with the freestyle team since 1991. So it's just been it's just something I really love to do. It's a joy to do it. It's all volunteer. Nobody pays me, but it's a lot of fun. It's a lot of fun.
Yeah, and I think Dr. Stedman is still practicing today.
He is not. He has since passed away. So
Oh, he did. Okay.
yeah, so now it's called the Stedman Philippon Institute, but it's still in Vail and, quite well known. So we saw a lot of famous athletes.
Got it. Yeah.
Do you still ski today?
I do, I not much though. It just depends. I don't go out of my way to go on a ski vacation anymore. I used to have a place in Steamboat Springs. So being a snow snob, I would wait till it was a powder day and I'd go up on the east face and ski the trees and stuff like that. But it's been a while. But I'm on snow a lot with the team once or twice a year for sure.
We're here in Colorado, and Steamboat Springs is definitely my husband's favorite
Oh,
spot.
it's nice. So you know right where I'm talking about.
Yes, absolutely. We love it. Crested View is another spot as well that we love and travel to quite a bit. So
Love it up there.
but Dr. Burr, so I obviously read your book and I wrote down all the quotes that you had in your book. And one of the quotes that I love and I used to use it constantly is being a poor doctor with money and a rich doctor with choices. Can you just unpack that for our audience? Because I think a lot of our high earners listening right now have never heard it framed that way.
Yeah, and people. It's funny. People kind of sometimes misconstrue rich doctor, and there's another time for talk. But there's a lot of parts of being a rich doctor. And one of those 6 or 7 is money. But certainly it's a tool that helps us all, right? And so we all want to have choice. We want to choose where we want to live. We want to choose what we do, and a little bit of extra income coming in, particularly passive income, where you don't have to trade your time for it. It does give you choices. It lets you choose what you want to do with that time that you've bought back. And so you don't have to replace your income. You can just have some passive income coming in, and it gives you more choices, makes you smile a little bit more, gives you a chance to spend more time with your kids or your spouse or learning how to play the guitar or whatever it is you want to do at that time. So choices are really important because I think now that, there are a lot of physicians that they love their choice of what they do. Usually what I hear is, "I love medicine. I just don't like the business of medicine. I don't have any choice in how I run my business." So that's kind of what I meant. We all want choice. We all want to direct our own future. We all want to direct our own lifestyle. So having choice is a real free and liberating feeling.
I think that's such a good segue because, over the past couple of decades, the business of medicine has really changed. Surely in the 80s, the business of medicine is very different than what it is now, where most 70 to 80% of physicians are employed. So, can you comment a little bit on the concept of medicine as a career and medicine sort of as a financial vehicle? How are these different, and how should doctors think about their profession as it relates to their financial future, do you think?
Right. There's two sides to every coin. In fact, Robert says you need to stand on the edge. You need to see all three sides of the coin, right? And so there's always good and bad. There's always yin and yang. Life is duplicity, right? So on the one hand, I would tell most people in medicine, and look, I've got a daughter that's a pediatric hospitalist. I got a son that's a med student, wants to be an orthopedic surgeon. So not my fault. They chose it. Anyway, but on the one hand, you will always make a good professional income. Whatever that turns out to be, you'll probably still make more than most people that are out there working. That MD is worth something. You have a chance. You can work harder. You can make money. Maybe it's not what it was, but it gives you choice. It gives you the chance to make some more money. Depending on how you use that money and your time, you can turn that into some pathways to wealth. The flip side is you don't have as much control as you had in your practice, as much control as I had. I owned all my practices. I started in the 90s. And when I wrote my book, I think the numbers I put were 54% of doctors were either employed or in large organizations. And it absolutely is 75, 80%, just like you said, Daniel. So that's a rapid change. And so that's not great. That's not choice. Actually, your choices tend to be limited. And, one of the last groups I was with, they're owned by private equity. They don't really make the decisions right now, and they're just waiting until their vesting period's over so they can bolt. So you got to know going in. And I told my son, who's a med student, I said, here's what it's going to be like. You will work for somebody. You won't have the practice that I had, so don't think that you're going to have that. So I would encourage people to try to, find ways to enjoy what you're doing. It's a choice. You can enjoy being a doctor or you can hate every minute of it, and that is a choice that you made way back when. So try to find a way to enjoy it and then try to find a way to enjoy making a little passive income so you get more choice later and you don't have to be that doctor if you really don't want to going in the future.
Right, absolutely. And Dr. Burns, when did you realize that there's more beyond medicine, and how did you end up choosing real estate over other asset classes?
Yeah, it's a good question. It's, again, I always call it touched by an angel or lucky move, that sort of thing. But I had none of these thoughts. I did med school, I did college. I partied too much in college. I found my way into med school. I went to med school, did my thing, got into residency, and I was halfway through the 5-year orthopedic residency. And y'all know we get trained by where it's an apprenticeship model, just like a blacksmith, just like a farrier, any of that kind of stuff. We get trained by people who have done what we want to do. They've done it for years, 10, 20, 30 years older than us. So I'm watching these docs and, they made a lot of money back then. Back in the mid 80s, these guys made a lot of money. But man, they weren't happy. They were complaining, saying they didn't have control of the insurance companies and things like that, that too many questions from the insurance companies. You can imagine how much worse it is now than it was then. Second or third marriages, complaining. So I saw this enough that I decided, look, I don't necessarily want their money if I have to have their life. There's got to be something else. So I started looking for anything that wasn't correlated to medicine. I first thought I was gonna carry a briefcase and go into administration, right? Looks cool to carry a briefcase when you're wearing scrubs all the time and staying up all night. I found out I wasn't very employable. That didn't, that was a dead end. I looked at, I couldn't start a business. I didn't have I didn't have 2 nickels to rub together, so I couldn't do any stock trading and didn't have the ability to do that. The only thing I could think of was I saw real estate, and at the time, actually right then when I was making these decisions, my hometown, Austin, Texas, was on sale. I mean, think back, guys, 1987. What happened in 1987? That was the savings and loan crisis. So Austin, Texas was on sale. You could buy a view lot looking at the lake for $5,000. So I didn't have, I had about 499, I didn't have any money. But I decided, okay, I'm gonna do real estate because you could do it. It moves slow. You don't have to be the smartest guy in the room. You don't have to act fast. You can do it part-time, full-time, with partners, by yourself. So I just started learning. There was no internet. Al Gore hadn't invented it yet. So I read books. I talked to people, and it was kinda during that period when I came across, well, I'd already bought some stuff before I bought Robert's book, but that's kinda what happened. And so decided to get into real estate, and I just learned stuff until I was done with my fellowship, came back to Austin, Texas, paid some bills, and once the bills were paid and I had some stuff saved up, I started looking at real estate, and I just bought something because that's all you could do. There weren't syndications. People like me, doctors, couldn't find syndications. I wasn't in those circles, so I had to go buy something, and that's what started it.
That's so interesting. So this was very early on, even during your training, where you started thinking about entrepreneurship and sort of investment beyond just into yourself as a physician. So was this a unique experience? Was there anyone else in the surgeon lounge that was thinking like you, or were you all on your own?
Man, I got the finger pointed at me a lot of times in the surgeon's lounge. Why do you want to do this? Just work more. You don't need to do that. I could go through the stories. I've actually got one in my book, about deferred gratification. I brought a deal to somebody who asked. They said, "Oh, I can just take call." Anyway, so I was the only one that I can think. I was the only one doing that. Nobody, at least nobody in my circle was doing any of that. Uh, but it worked out. And there came a time when I will tell you, there came a time when there was a choice between building the real estate bigger or going out to market my practice. And I decided that building the real estate would have a better long-term result. I've made plenty of decisions in my life. They haven't all been correct, but that was a good call because I still had very busy practice. So I just figured building that real estate was going to give me the choice to not have to be I didn't want to be the busiest guy in town. I just wanted to be the best orthopedist I could be and enjoy life, spend time with my kids. So I was able to cancel office and go read to the first graders and do stuff like that. So it was fun.
And that's so interesting you're saying that because as a spouse of a orthopedic surgeon, that's kind of my goal for him is to be able to buy back some time, spend time with our 3 little kids who are 3, 5, and 6, we're in the thick of it. So, but, he's busy, he's a hospitalist, and it's really, really hard for him to get away. And so my goal has always been using not only real estate, but different, financial strategies to see how I can supplement his existing income so that he can, spend some time, travel. We love to eat and really be with the family. So that the passive income that you mentioned is definitely critical in what I'm trying to achieve for my husband as well.
You two should make a great team.
Yeah, yeah. Well, I always say this because I forced him to read your book, but I always, I always tell him that you're very lucky that you married into finance because I was on Wall Street for 15 years, so I had a financial background. And that I would say he's a little financial challenged, so he does rely on me, but over the years, I've been trying to teach him about finances as well because, God forbid something happens to me, he then has to take, ownership of our family's finances. And so it's all about education as well, in addition to having somebody doing the work for you. But my other question is so you talked a little bit about passive income. You built this multifamily office industrial portfolio over the last 30 years now. What does passive income actually looks like you in your life right now?
Yeah, and you really what you describe is not passive. I sort of chose that as my active thing, but it created passive income. So originally, I just bought things, small stuff, small things, and just stuff organically grew. Right, I got better and better. I was terrified after I bought, or while I was buying the first thing I bought. But those early assets, truly passive. They're all managed. The money just shows up now. So that's truly, absolutely passive. Although I'm having to fix one of them now that I should have watched a little closer. Anyway, over time, projects got larger. And, as projects get larger, sometimes you need partners. Eventually you run out of money. Sometimes you need investors. And so that was that gradual progression. And our projects did get larger. I did get partners. And so when you turn that corner, you're now committing to being a steward of somebody else's money. And so that's a little more sacred than taking care of your own money, so that's what we did. But over time, it does create projects that can still produce passive income. Most of the other half of my portfolio, I invested and let things just happen. So I kind of call it I call it a hybrid income philosophy where you do some totally passive, you do some passively active, which means, you may buy the stuff and own it, but you can set it up to where you look at it once a month. And then there's true active stuff where you're managing general partner, sponsor, however you want to use the term. And, we go out and look at properties and do those sort of things. So, I think you do want some that comes in no matter what you do, no matter whether you're vacationing, playing with the 3, 5, and 7-year-old, or at work, and that helps. So lots of things that do that for you.
And if I could dig into that timeline a little bit. So, the late 90s is when you first started buying real estate. About a decade later, you founded or co-founded R&B Capital Partners. And about a decade after that, there was Presario Ventures. Can you dig into that and give us a little details about sort of what led to this? First of all, what do those entities do? And sort of what led to their creation? And what is the status now?
It was that organic growth. So I was doing stuff on my own, growing things. And then I was speaking. This is crazy. So I was speaking in Arizona for Robert. He used to have these investment conferences. And so I was doing something on stage for him, and he's like, "Yeah, Tom Burns is, he's a doctor, but he's still a good guy." He jokes all the time. But he's from Austin, Texas. And so I didn't think much of that. But at the break, a guy and his fiance come up and say, "Hey, we're so and so. We live in California, and we're moving to Austin. Will you be our friend? We'll be one of our contacts." So sure. So that person, I actually ended up seeing him as a doctor. We stayed in touch. He was in the real estate world, or was getting into the real estate world, and he knew I was. So, we talked a lot together. And, long story short, about 6 years later, we like decided to partner up on something. Uh, that's when we formed R&B Capital, right? And so that was just was the name of the project, Retreat at North Bluff. We formed R&B Capital. We took 16 acres and we built 240 units of apartments. The problem is we started that in 2008, and our debt was set in 2009, and our lender called us up one day and said, "Sorry, oops, we're not going to give you money, because this great financial crisis is a problem and we don't like it." So somebody said, "Go find, go talk to HUD." Neither one of us knew what HUD was, but we got a crash course. We got a HUD loan. We built those apartments. We owned them for a long time. So that was RNB. And we didn't do a lot after that because we were so terrified of doing a bad job that all we did was work on that project, and it did well. We owned it for 12 years. And so, later on, when it came time to formalize things and maybe bring in some employees, we formed Presario. So R&B has been mothballed now. The entity itself, and Presario is in process of winding down. So there have not been any new projects in Presario for, 3 or 4 years.
Okay, so you have seen a number of financial crises now, and you've been investing throughout all of them. And that is, I think, really relevant because, as you know, interest rates quadrupled a few years ago. A lot of people are hurting in terms of multifamily valuations, but that's opening up a lot of opportunity for new investors to kind of get into this. So what can you tell us about living through these financial crises and how to continue investing through them, given your experience?
Yeah. So first thing I'll tell your listeners is I quote, learned a lesson every one of those things. Means I lost money each time something happened, right? And you do learn lessons. You don't want to repeat them. I was pretty good at not repeating the lessons, but people used to ask me, "Hey, things are going pretty good now. What do you think is going to happen if there's another recession?" It's like, I don't know. And I'm curious to find out what I'm going to miss this time because it happens. It just seems to happen every time. So, we still have projects that, we had development projects. So we don't like variable debt. We had development projects. So that's the definition of some variable debt. So that hurt. So, COVID hurt supply lines. The debt hurt us. And so we've got projects they're coming back, but it's taken a lot of work. So, not immune for sure. But, again, the other side of that coin, there are some capital stacks and some properties that are in some pretty significant distress, which is no secret to anybody listening to this podcast or interviewing on this thing. There are some great deals out there. With one of my companies, we looked at properties and, where you could buy for the debt. Well, it still wasn't a good deal, because when you got 80% leverage and the deal goes down 35%, that doesn't work. But, if you've seen the articles, extend and pretend's kind of ending. Banks are getting to where they have to mark the losses down now. So it's happening. And that's what, I am going to be getting back in the game instead of developing. I would suggest to people that, although it's hard to find those properties, there are people that are going to make good, solid returns over the next decade with properties that they buy now, if they're bought right. So I'm a fan. I was on a panel the other day and the guy said, "I'm not buying multifamily." It's like, well, somebody is, and there's still good deals. And there's lots of asset classes. And, I've kept my expertise in multifamily. We just haven't bought anything for the last 4 years or so, but it's time now.
Yeah. Yeah. Me and Daniel from both have bought multifamily last year at a 35% discount. So
No doubt. I believe it.
the storm is passing, and I feel like there's not a lot of inventory out there, but if you can find the right ones that pencils in, it's going to be incredible deal.
Yeah. So it won't be not as much of a feeding frenzy as, after the GFC, but there's opportunity out there.
Yeah, I kicked off my real estate fund called Cirrus Real Estate just 2 or 3 years ago. And in some ways, I just feel so lucky about the timing because so much of real estate is where you are in the cycle. And, I'm feeling pretty bullish about where we're going now, but certainly not the case if you had started and really started ramping up in 2020, 2021, so a lot of that is just about luck in the cycle.
I do know a group that started right about that time, but boy, are they getting a lot of lessons, and they're young, so they've saved everything, so they're gonna do well through the next couple decades. So there's always lessons learned.
Definitely. And I feel like a lot of doctors are so risk averse that it's taken them time to get back into the market. And right now it's just, a lot of them want to get back into the market, but just don't know how. What would be your advice for them?
I mean, always be diligent. You just have to be know who your operators are, know who you're giving money to, make sure it's somebody that understands the project and could pull the levers on the project. So, and it's very difficult. Yeah. Again, on this panel, we talked about diligence and vetting. Be wary of be wary of people you don't know for sure. You'd like to invest with somebody that you know. Be nice if it was somebody that weathered the GFC and maybe weathered this last downturn. But you can't always find that. But because there is risk, those PPMs, they say you are at risk. You can lose all of your money, and guess what? You can lose all your money. And sometimes you can have the most honest, well-meaning sponsor GP in the world, and they might still lose money. So do your homework. Don't just pass your money off and expect it to miraculously and magically show up as return. Do your homework and make sure you've invested with the right jockey. Make sure they know how to ride their horse.
Absolutely. All right, so let's pivot slightly here since the show is also about the role a spouse plays. Um, in your, you know, portfolio building and as you're going through this journey, was your wife on board from the beginning? And I don't know when you were married. So I was married to my husband during residency. And, I talked about different real estate opportunities. And he was like, well, honey, I don't know, too much risk. But I did it anyway because, I made the money at that point. So I decided basically for him. But maybe you can talk a little bit about your journey and, what did those early conversations look like for you?
Sure. I think, my wife is I married my wife between third and fourth year of med school. So she's she knows for a fact that I've got unmedicated attention deficit. So I got to have all kinds of different things I got to do. So, at first it was just, okay, honey, go ahead, whatever you want to do. Cause I was just, learning stuff. And I did make sure that the finances were in a spot where they wouldn't take a risk. I do talk about that I didn't want to risk my kid, my family's welfare by me taking risks. I couldn't afford to lose it all. So we kind of started slow. But she was a fan and I would kind of tell her, hey, well, I'm doing this. She'd say, that's nice, honey. I do remember one time I looked one time and I realized that year I made as much money in real estate as I made as an orthopedic surgeon. And I said, honey, they call that, that's like called financially free. I mean, I said, so I get, I did it. I guess I guess I wouldn't have to work if I didn't want to. And I joke. She said, that's nice, honey. Would you take out the trash, please? So she didn't get too excited, but she met Robert, got real excited when she read his book. She's really smart. She did a lot of work raising the kids, but got the bug and, bought some rental houses. She said, I want stuff on my own. So we bought some stuff in Austin, which was silly. My comment was that, they never cash flow, but by golly, it actually didn't cash flow, but we knew that. But boy, the appreciation made her look like a winner. So anyway, and now she, she runs, she's an integral part. She runs the finances at home. And I mean, and she got a big spreadsheet. So she runs stuff. And because of that, I'm able to do my other stuff. And she knows everything. She sees all the companies and everything. And we work on that together.
Sounds like you've got a great partnership. When you mentioned that your wife was not that impressed when you announced that you got to financial freedom, I think that's really, I want to, double click on that because I think so many of us, especially getting started in this financial journey, we set that as the goal, as in, if I can just get financially free, I'm done. But, there is a life beyond that, and maybe the numbers are not exactly the most important thing. What would you say are the real priorities beyond financial stability and potentially freedom?
Yeah, I mean, yeah, and that's part of all those pillars that create wealth, create a rich, what I call a rich doctor. It's I mean, you want the time to work on to work on your physical health. You want to work on your relations, the people that you know. You want to work on your spiritual side, whatever that is, whether it's meditation or worshiping somewhere. There's so many parts of life that sometimes we don't have time for. There's education. You might want to learn how to speak a different language or do like I did. I tried to learn how to play the guitar. So we and Daniel, a lot of people, they have that, financial freedom wasn't necessarily in the vocabulary when I was doing all this stuff. It was pretty much, I don't want anybody telling me what to do, so I need money coming in. You know, it's kind of, yeah, there's another term for it, but it's not a GP. Uh, but it's people get sometimes overwhelmed when they have that financial freedom goal. I tell people, just try to replace your utility payment for the year, or try to replace your mortgage, or whatever your country club bill or your car payment or something. Those smaller goals help. You can't have the overarching financial freedom goal, but chunk it down like like the goals classes and courses would tell you. Chunk it down a little bit. Because it get frustrating. And, partial freedom, like I said, makes you smile a little bit more. You get a little more time with your kids or your spouse. It's worth it. So you want to live, you need to sit back and realize what makes you happy. And for some people, it's working. For some people, it's working for an employer as a doctor. There are plenty of happy doctors. So figure out what makes you happy. I worked for another dozen years after I was, quote, financially free. So I just had a great time. And my last 4 years were free. I tell everybody I did it for Jesus because I didn't get paid, but I had a great time. I had a PA that was awesome, and I only worked mornings. So anyway, I'm blabbering an answer at you, but find out what, what pulls your chain, find out what excites you, and then go towards that, travel, family, health, you name it. So I'll stop because I could go on all day.
I love that. I mean, I think that's a really great response. It's a holistic response, and I love that.
It's an achievable response because we think too broadly and too big sometimes, and it becomes super overwhelming. So, what you said about kind of nudge away at smaller pieces is probably a better mindset to have.
We doctors, we're achievers. So if that's the big goal, we got to hit that goal, right? It's like becoming a doctor or becoming a whatever specialist. So it's maddening for some docs. So, keep it small, get little and celebrate those wins. I'm making enough passive income to pay my mortgage. Let's go out to dinner, whatever. Take the kids somewhere, take them to Chuck E. Cheese or whatever's still around. It's important to celebrate your wins and you know keep moving the goal line further out, and you can have that big goal way out in the distance, but don't let it create anxiety.
Something that have seen be a really effective sort of thought experiment is, what if you had enough passive income to just replace half of a clinic day? Where you're making a certain amount of income now, but if you can take a half day off from your Monday through Friday because you have enough passive income from your investments, how awesome would that be? And if you're burnt out, you're pulling 50 or 60 hours a week, that is a pretty amazing thought. I've seen that be pretty effective.
It's funny you say that because I talk a lot about the fact that I just started making a little bit of passive income. It wasn't life changing, but it was schedule changing. So I don't know if it was how much money I was making or psychologically, but on Friday afternoons, I used to have surgery in the morning and then I would go to the office. Everybody knew young Tom Burns was in the office, so I got all the emergencies. So I joke for the doctors in the crowd, my block time was 5 p.m. on Friday evenings. I had to go in and do hip fractures and stuff. So finally, one day I decided to cut out Friday afternoons, and I felt like Bill Gates. I had on non-call weekends, I had 2.5 days off. I was the man. So it was a huge psychological boost. And what do you think I did next when the money got a little bit more? I took Wednesday afternoon, et cetera, et cetera. Just titrated the time I worked based on the income that I was bringing in. It was a wonderful way to create a lifestyle.
Yeah, you're definitely preaching, what you're writing in your book, which another quote within your book that says, passive income pays for the life I want to live, not the life I have to live.
Right on. Hey, I like what I wrote. That's pretty good stuff.
Yeah, I do. I do too.
I should read my book again.
I mean, I literally went through the book and just wrote down every quote that I loved and I preached it to my husband.
That's awesome.
Well, maybe we can talk a little bit about your book. So I know Robert asked you to write this book, but was that a thought even before he suggested it to you?
To be honest, no. I mean, we're sitting, I don't know, we're sitting outside his office, and he was, we're having lunch, and I asked him because he usually would put out about a book a year, and I said, "So what's your next book?" And I joked that, he told me, and then through a mouthful of salad, he says, "You should write a book." I said, "I'm not going to write a book. I don't want to." He goes, "No, you got somewhat of a story. You should write a book." So I joked and said, "If you can do it, I can do it." Uh, Thought about it. So there was really that was the first thought. I hadn't actually thought about that. Went home on the plane, decided, all right, I'll look at this. And so I wrote it. No ghostwriter. AI didn't exist. I wrote the thing I was full time practicing, so I wrote it mostly on weekends, and I'd skip church if I woke up with a good idea, and I just kept writing it. And so it really did come from the heart. It's really just designed to create hope and guidance for somebody that wants a little more out of life, wants to, kind of live closer to the life they dream of. And so it all kind of came from me. I had editors and things like that, but it was a good process. I learned a lot about myself and some other things.
How long did it take you?
It took me 2 years to write the book and another 6 months to get all that other stuff done, all the layout and the graphics and everything. And, you know, I had a I got a friend who wrote a I got a friend who wrote a New York Times bestseller. Uh, you ever heard of the book, The One Thing?
Yes, Gary
It's
Keller.
Gary Keller's a good friend of mine, and so
Okay, I'm part of Keller Williams.
oh,
Uh,
okay. So, yeah,
yes.
I've known Gary for 35 years, so Gary takes me in his office, shows me how to write a bestseller, and of course, the book was already written, and the book was finished. I was literally taking a walk one day on the Saturday after I finished the book on a Friday, and I'm thinking about it, but I'm gonna send it out to some readers, and I'm thinking, "What am I gonna tell Gary?" Because I didn't do what he suggested. I literally stopped in my tracks, and over the next couple of months, inserted some of the ideas that Gary had thought. So it took 2.5 years, but I'd probably still be editing the thing if I hadn't cut the umbilical cord.
Is there another book coming up?
I think so, yes, not anytime soon. I'm kinda deciding which way to go with it. I'll probably second edition the first one with some updates, but I think so. I think there's enough stuff to bring out a second book to help people that are on that journey, the people that got my book for a reason, something to add to it, not just regurgitate the same stuff.
Yeah. Well, I would be very excited to read your next book. So
Thank you.
All right. So, it's been a really insightful into kind of everything you've built. We've got a few kind of rapid fire questions to throw at you, just kind of top of the mind, short answers, no overthinking. You wanna go for it, Lila?
sure. All right. This is just fun stuff. Okay. All right. First question. First investment you ever made?
I think it was a condo. Oh, well, no, it wasn't. It was, mutual fund.
Okay.
Yep.
Best financial advice you ever received?
Ooh, know who you're investing with.
Okay. Worst financial advice you ever received?
Oh god. And the market always goes up.
Eventually.
Book you give away the most other than your own?
Other than mine and Rich Dad Poor Dad, I'm a fan of The Gap and the Gain by Dan Sullivan and Ben Hardy. Great book.
Yep. Love them. Love them. Read all of their books. The one thing you still want to build?
Ooh, probably an educational community.
What does a perfect day look like for you now?
Oh man. Quiet in the morning with a little, a friend of mine, Hal Elrod did the Miracle Morning thing. So I do that in the morning. So quiet morning, me and the dogs, take the dogs for a walk. Um, a little bit of work. I'll go crazy if I don't have a project. So some kind of work, and then workout, or either workout in the morning. I do that every other day, and tennis probably 4 or 5 times a week, with a number of tournaments slipped in on the weekends.
So you kind of addressed this question a little bit, but what does rich mean to you in one sentence?
Yeah. To be rich means to have some control of your time, to be able to spend time with the people that you love, keep keep a healthy body and a healthy mind, and get as much out of life as possible, because we're only on this rock for a short time.
Amazing. Thank you. So this has been such an amazing conversation. But before we let you go, if people do want to kind of get in touch with you, find the book, where can they do all of that?
Sure. Books on Amazon. Just look up "Why Doctors Don't Get Rich," and then you can get a link to it through my website, which is richdoctor.com. If you want to send me an email, send it to hello@richdoctor.com, and I get it. So always happy to talk to
You
folks.
will answer too.
Yes, absolutely. Yeah, see, Lila, she sent it. I answered her.
Yep, absolutely. If you put your cell phone number down or your email address down, you bet I will be reaching out. All right. Well, thank you so much, Dr. Burns. This has been an awesome conversation, and we're so honored to have you on here. And to everyone listening, thank you for tuning in. If this episode gave you something to think about, share it with someone who needs to hear it, and we will see you next time.
Appreciate what you guys do.
Thanks for tuning into Paging Financial Freedom, where we help doctors and spouses like you take control of your finances, invest smarter, and build a life by design.
If you enjoyed today's episode, don't forget to subscribe, leave us a 5-star review, and share this with someone who needs to hear it.
And remember, financial freedom isn't just a dream, it's a decision, so let's get there together.